real estate investment after being out of the game for a little bit, there are probably 10 different things you need to think about and have the answer to or be working on before you can make that investment. I'm Bill Gross. I'm the host of the LA County Real Estate Investors Association. This is our official weekly podcast. We get together every week live Tuesday, 3 p.m. Pacific time, 6 p.m. Eastern. We also live stream this to YouTube, Facebook, and LinkedIn. If you're watching live on social media, feel free to put a question in the chat box. I'll do my best to answer it live. If you're watching it afterwards on the recording, I'll probably circle back and get to you. I try to with almost every single question. It's meant to be participative. There's no stupid questions. I've been in this business since 1986. I deal with investors all the time. It's my business. I'm a real estate broker in LA working with probate real estate, helping investors and families, attorneys navigate through probate real estate. But I also come across first-time investors every day. So if you have questions, ask them. I'm here to help you. And let's jump right into what are the top 10 questions that I get asked and I have been asked on this podcast over the last 3 years we've done this. So what are the top 10 questions? Number one, setting your budget. What's the budget? How much do I need to start with real estate investing? And there's really no set answer to that. You can start investing with $100 a month. You can start with $1,000, $50,000, but your budget will determine what's appropriate for you. For example, if you only have a little bit, you might want to invest in real estate that is either a real estate investment trust. Like I have one I love, Rexford Industrial, does industrial property here in Southern California. It's like buying stock. You go into Vanguard or TD Ameritrade or Schwab, you can buy shares of their stock, they're publicly traded, and invest $100 at a time that way if you want to. After it accumulates, you can take your, I'm not touting that stock, I'm just saying in general, you can invest in a number of companies. And then as your savings grow and you get return for your money, you can take that and maybe trade that into a property. So your budget can start slow. You also can flip property with no money. You can trade your sweat equity, your time, effort, energy, find deals for an investor, and they might pay you for your time. And that way you learn both how investors work and how to find deals for when you do have money. So you need to find what your budget is. Now, if you have more, the goal is to make more money than you spend, live on less than you make, and invest the difference. That's Rich Dad, Poor Dad at its basic. Once you're spending less money than you make, you want to invest that money consistently. So over time, the return for your savings is more than you live on. That's called financial freedom. So as you start to accumulate money, invest it. As that savings grows, not only the money you set aside, but the returns on that money grows. Eventually, you're living on the money you've made, the returns on it, and then the money you're making goes into the pile as more investments. That's financial freedom. But you got to start somewhere. So set your budget, get started, because it's easy to say, well, I have enough to buy a house. I can't put 20% down. You'll need 20% down. I'm negotiating offers on one of my listings right now with 3% down. But more important than that, you can find properties and flip them for no money down if you go into wholesaling or retail, wholesaling properties. But you've got to start with a budget and work that budget regularly and make a commitment to do it on a monthly basis. There's question number one, setting your budget. Number two, which is the best property type? I guess it's a lot. I find people going to podcasts regularly. Maybe they go into Bigger Pockets and listen to all the episodes. And say, well, I'm going to invest in this because it's the best investment. There is no best investment. If ever there's a best investment, the price for it goes up. Now it's more expensive. It's no longer the best investment. The key is what's the best investment for you, for your risk tolerance, for the area you're in, for your understanding and knowledge of the business that you enjoy investing in. I mean, I like multifamily properties. I don't really like so much commercial. I certainly don't like retail properties. That's me personally. You got to find the right property for you that you learn, understand, can bring some competitive advantage to. Then most importantly, find people that can help you get those good investments. Understand that anything with a high return has a high risk as well, by definition. I had so many friends who invested in various cryptocurrencies who said, oh, Bill, you got to do this. It pays 4% per week. Don't you know on a year that's like a 500% return on your investment compounded? Well, no, I know that. But I also know that when returns are greater than average, there's some risk there. And you might avoid the risk for a period of time, but generally that risk comes to roost at some point in time. So do your research, but you need to find the best product that fits for your knowledge, for the team that you can get involved with, or the people you get involved with, and then the geography that you're involved with. There is no right answer, what's the best. The question is what's best for you. Number 3, the right location. Again, you can research hot markets. It's very difficult, though, to invest out of your local market. I interviewed last week a guy who had friends in Tennessee, so he invested in Tennessee. What I do notice is the people who do that are people who've moved around a lot and are comfortable new environments. They learn quickly how areas work. But in general, for most people, you want to have some knowledge about where you're investing. So for example, me, I don't like to invest in Southern California because my business is here. But I do invest in Texas and Florida. One reason why is I used to live in Florida. I used to work for a Texas company. I travel those two states pretty regularly. I know those markets pretty well. So you need to find a location geographically that you like. In general, I tell people, why wouldn't you start near your house? Just draw a line or a circle around your house of maybe 30 minutes and start there. Investigate there, learn there. If you're going to flip properties especially, find something close to your house. So number 3 is, what's the right location for you? Number 4, residential or commercial. This goes back to the property type. What do you like? What do you feel you have an advantage in? What do you know? Personally, I know residential real well, though I do like to diversify, and I have investments in industrial property, small, and I have investments in multifamily. I don't know retail, don't like retail, not involved with retail space at all. But you might have some other knowledge, information. You might know good companies that you would invest in. You might know a particular good building going in by some company you're involved with. So you need to make that decision on your own. In general, though, it's not the right product, it's the right product for you, residential or commercial, or what types of product is there. Number 5, financing options. Now, some people start small by just putting in cash. Put cash into stock-type properties, cash into limited partnerships, or go cash in with a partnership on a property they're going to buy. At some point, if you buy the property on your own, there's financing. If you're going to buy a house, there's residential financing. If you're going to buy a multifamily property, there's multifamily financing. If you're going to buy property to flip it, there might be a hard money loan. There's all kinds of options that fit the investment that you're looking for. So you want to make sure that you find a great lender on your team. Understand the product they're looking for. Understand the documentation they're looking for. Make sure you're pre-approved before you offer on property. That's critical. A great lender will help sell the listing agent on accepting your offer. Literally, before I did this call, I talked to 2 different lenders making offers on properties on my listings. And the quality of the lender is critical in deciding which offer we're going to accept. So know your options and then get your work done. Number 1 is be prepared financially. Failing to plan is planning to fail. I won't work with buyers who don't have themselves pre-approved with a lender of the product that they're looking for. You need to get pre-approved. Number 6, evaluating property potential. How do you evaluate the potential returns and risks before investing? So I tell people when somebody presents you a property, unless you're a professional full-time, they should be able to answer 2 quick questions right away. 1, how much will it cost me? Not just the down payment, the initial investment. Are you looking for closing costs? Are you looking for reserves? What's the total amount of money you need me to invest to make this property work? And then number 2, what's the return? How much will I get month 1, month 2, month 3? You should get financial documents if somebody's presenting you an investment, a pro forma, but you want to see the actual numbers, not the projected numbers. Oftentimes, people will present investments, say, oh, it's got a great cap rate of 8, 10, 12%, but they're using rents that do not apply to that property. Maybe there's rent control. Maybe there's tenants with long-term leases already in there. You need to look at the actual numbers. You need to get the actual expenses and plug them in. So when you evaluate property potential, well, you always want to start with what is true today. Then you can evaluate. If you do that and realize, well, these are the rents today and it cash flows. What if we invested money? Can we upgrade the rents? Then that's the upside potential. But don't even go there without first knowing where the numbers are today and can you manage those actual numbers today. That's the biggest mistake investors make. Number 7, what are the tax implications? How can you optimize your tax strategy? For example, you can buy a property in December and get the investment, you can get the tax loss for the whole year. That's why people get very excited by the end of the year. One year, I had an investment, $50,000 I made in December. I got $41,000 on paper tax loss depreciation in that year. I had great income that year. I had excess money that year. I immediately got a $41,000 write-off, which in cash turned out, because I'm in California, turned out to be about a $18,000 lower tax bill for the $50,000 I invested. Plus, I still own the property, and I'm still getting return for that property. So what are the tax implications? Understand those numbers. Now, what you don't want to do is make an investment simply for the taxes. What I tell customers is, bragging about your tax savings is like you're sitting at your kitchen table and the wind blows $3 out the window and one comes back. Are you happy with the one that came back, or do you lose two? It's good to have one come back. But in the long run, you need to have an investment that's going to have a return on your investment. And taxes are a piece of that. And you want to maximize that, but that's not the whole purpose of the investment. The purpose of the investment is your after-tax return on your investment. Number 8, finding a real estate agent. How do you find a reliable, knowledgeable agent? Well, you got to kiss a lot of frogs to find a prince. Generally speaking, I don't work with first-time investors. I work with experienced investors who want to buy one of my probate listings because it's a lot of work. And for a real estate agent to work with a new investor, you need to realize there's a long learning curve. There's a lot of time involved and patience involved in showing you properties. So if you're going to work with an agent, you need to commit to your loyalty on your side because they're investing in you as well. Generally, if you're an experienced investor, you're looking for a realtor who knows that product niche. When I talk to a real estate agent who specializes in medical office buildings, I know right away they know their game. You want to work with somebody who really knows their business, and you can tell the professional right away. I'll give you an example. My wife and I had surgery about 8 years ago, and we were interviewing doctors. And I made an appointment for a second opinion at USC Keck, which at the time was a newer hospital. It's now become one of the top in the area. But I remember we had an appointment already with one doctor at Cedars-Sinai, great hospital. We had the second appointment. My wife and I went and we met with this doctor. And he was so masterful in his explanations. He was so comfortable answering our questions that by the end of the appointment, when he walked out, I turned to my wife and said, "That's the guy. Like, a doctor can't be better than that." You want to work with somebody who is committed to you, patient to answer your questions, to help you enough where you say, "That's the agent I want to work with. You shouldn't sell for any less." So finding the right real estate agent, I think you'll know when you find the right one. Number 9, repairs and maintenance. What kind of repairs and maintenance can you expect as a property owner, and how do you budget for them? I'll tell you one thing. You need to find the real numbers for that product in that market. One way is an experienced property manager. Property managers deal with repairs and maintenance all the time. They deal with financial statements all the time. They should be able to give you an actual assessment of what the expenses will be. And then if you're hiring them, you want to hold them accountable to those numbers. Right? Let them know ahead of time you're going to do that because you expect those numbers to be the numbers that you experience based on their input. But don't take their numbers for it. You want to check around, talk to other agents, look at other investments and see, is that what you can pay for gardening in that market? Is water included? Is it metered? If it's not metered, what's it going to cost me on average? And same with other utilities and other expenses. Insurance is another one, a big number that you should get a quote for actual insurance on the property before you buy it so that you know what the real number will be. And also taxes. Make sure that you use the taxes you'll be paying because in most jurisdictions, when you buy the property, it gets reassessed. If your estimates are based on the current seller's tax numbers, you might be in for a shock after you buy the property. So you want real numbers for the repairs and maintenance. Number 10, and the last of the 10 questions I get asked all the time, market trends. Where's the market headed? Now, I tell people all the time I don't have a crystal ball. The truth is, I have a crystal ball. It's right there. Do you see it? Can I just tell you, it doesn't really work. I ask it questions. It doesn't really tell me anything. You want to know where the market is today. That's number one most important. And the is today varies by location, by product type, by price range. I'll give you an example. I'm a broker here in LA. The low-end housing, I have condos in the 350s. I have lots in the 500s and houses in the 700s. Red hot. Houses over 5 million, cold as can be in the same city. Product types, some products red hot. Retail, not red hot. Homes, hot. So you need to know the difference of the products. Where's the market trend in your location of that product type and that price type? What we do is we look at the numbers, we pull the current active listings, the pendings, because that's what people are trying to get them sold for, and most importantly, the most recent sales of that product in that area. Oftentimes agents say, well, there's no sales. No, if there's no sales, there's no market. Run for the hills. Or if there are sales, they'll say, well, those are lower, but the market's improved. Has it really? They should explain to you why the market sales are lower than what they're telling you your property is worth, because generally, the best indicator of the value of your property are the 3 most recent sales that are most similar to your property as adjusted. So market trends, I'm not big on predicting where the market's going. I think that I learned a long time ago, economists are more wrong than they're right. There's a Wayne Gretzky saying that you skate to where the puck is going to be, not to where it is. But in real estate, I don't believe you can predict where the puck's going to go, but you better know where it is right now. You better know the actual data, not what somebody tells you. So that's why every week I put out my market update, and more importantly, I evaluate based on the news why I think the information being given is wrong. So that's number 10. So those are the top 10 questions I get asked. What are your questions? If they're not included here, put it in the chat box. I'd be glad to get it live if you haven't finished already, or respond to you after the fact. If you'd like a list of my top 10, feel free to email me. Bill at the LAProbateexpert.com is down below, and I will send you back a list of these top 10 questions I just gave you. But feel free to add your question in if not, or which of these 10 were the most interesting or helpful for you. Now, I want to remind you that this is the official podcast of the LA County Real Estate Investors Association. We have a free meeting every month. It's the second Thursday of the month in Los Angeles, in the Culver City area. It's at the Iman Center on Motor, just south of the 10 freeway. And you can get information at lareic.com. It starts on Thursday this week at 6:30. We have a great presentation. You go, girl. 4 outstanding women, 2 are friends of mine, Deborah Razzo and Jen Maldonado are 2 of the 4 speakers. But again, it's free, starts at 6:30, and we have a lender's fair before that where we can answer questions. You can meet people, meet professionals, come up and say hi. If you saw this presentation, come up and say hi as well. Okay, I don't see more questions in the chat box. I think hit them all. If you have questions, please reach out if I can help you in any way. As always, make this your best day ever. Thanks so much for joining. We'll do this again next week, Tuesday, 3 p.m. Pacific, live, and we'll do it unrecorded as well. Have a great day, everybody.